Hey everyone, Julie Younger here. It's time for the informational video of the week. And this topic today is loans. Loans and the three things that you should consider when you are shopping for a loan. You should consider how much time, the length of time, the interest rate that you're getting, as well as the fees. So the length of time is, say, a 7-year balloon or a 5-year balloon. So balloons are, you make your average payments and then you pay at the end of the term a balloon payment to pay it off, or you refi. You either have to come up and pay at the end of the term, say 7-year balloon, for the whole amount of the loan. That's what a balloon is, the balloon payment. There's ARMs. There's a 7-year ARM where your payment is the set a payment for 7 years, and then after 7 years, it fluctuates. It will, it'll change according to what the average rate is, whatever the market bears at that time, and then it can only change by a certain percentage every year. I personally have a 7-year ARM, and I have, my original rate was 3.25% 7 years ago. Now my interest rate is 2.5%. It went down a whole point. However, next year, the maximum amount it can go up is 2%. So I could be looking at a 4.5% loan next year, depending on what interest rates are at the time. There's also 15-year loans, which in theory, it looks, you're paying your mortgage off 2 times faster than a 30-year traditional fixed rate loan. Those are terms for length of time. Then there's also interest rate. You got to figure on each one of these mortgages, the interest rates vary depending on what program that you're using. And then also the fees. There's so many fees that come into play with each additional lender that they all have their specific fees that they charge. And I definitely would encourage you to shop around. I know that if you shop around for a mortgage, within 3 months, I believe, you can shop mortgage lenders without getting a really hard hit on your credit. So there's things called a soft pull on your credit, and then there's the hard pull on your credit. And you are shopping interest rates, which I highly recommend that you do. You shop mortgage lenders for interest rates as well as fees, because somebody might come in and offer you a great rate, but then they charge you a whole mess of fees and you're really not that far ahead. One last thing that I want to throw in there, a little caveat that you might think about. The big bank lenders, the big box lenders, the Wells Fargos, the Chase Banks, the online lenders, Loan Depot or Rocket Mortgage or things like that, they are looked at and viewed a little bit different in the local seller eyes than, say, a lender that's in the market, that's a mortgage banker. There are differences between a mortgage banker and a mortgage broker, and maybe I'll go over that in the next video. So keep in mind that I am licensed in Oregon, Washington, and Arizona. If you're thinking about buying or selling, I'd be happy to help. Just reach out. I hope you all have an amazing day.